My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends? I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me, 1-800-743-CNBC. Tweet me, Jim Cramer. My week for Palantir finally over. A week where we get results from an insane number of big companies, including companies like Alphabet, Amazon, Apple, Meta, Microsoft. So many companies that it's almost impossible to remember what's driving these moves. It has finally concluded. As the Dow gains 289 points, S&P advances 0.41%, and the Nasdaq jumps 0.80%. We ponder, how good was Amazon last night? I forget. I mean, it was good, right? Pretty fabulous. How weak was Apple? I don't know. I mean, maybe better than feared. In the end, the tech titan action this week was more about who could tell the best story, which surprisingly was Alphabet, the parent of Google, and who had the biggest blowout, which was Amazon, which had a poor number last time. You know what? It's a travesty that all these companies report during the same week. No one could possibly study all of them and make good decisions in such a short period of time. And I say that as someone with a travel trust that owns every single one of those stocks. There's a reason why we have a whole team. Otherwise, I would have gone nuts years ago, as opposed to just this week. Now, I remain steadfast that every one of these names, including Apple, is good enough to own. Apple's the only one that's too expensive if they can't exceed the projections for the current quarter. But the adjustment for Apple's disappointing outlook has now been made. I bet the stock settles between 210 and 220 next week, and I will be pounding the table. The others can be bought at these levels now that they've all come down, except from the highs, except for maybe Amazon. I mean, Amazon was at 161 when I pounded the table last time. It's going up all the way to 197. Wasn't it easier to buy in the 160s? No, because people thought it was going to the 140s. Now, with that out of the way, let's go to the game plan. We have still one more bombardment of earnings, but I want to start the game plan in the middle of the week. Oh, look at this. It's on Thursday. That's an odd thing. Arguably more important than the stock market is the federal open market. I mean, for the stock market, then the election is the Federal Open Market Committee meeting. And why is this? Well, this is so important because bonds keep going the wrong way. For instance, today we got this incredibly weak non-farm payroll report. It was distorted by hurricanes and labor strikes. But at first, the bond market reacted positively. Interest rates came down. I thought that was going to be terrific. But then bond sellers came back with a vengeance, and long rates screamed higher, reaching their highest level since early July. In my opinion, the Fed needs to cut rates again. In the last couple of weeks, we've heard from too many businesses that have made it clear that we have a real slowdown on our hands. The economy's a little shaky. The bond market didn't like it when the Fed started cutting rates in September, though, despite a relatively strong economy and a healthy labor market. So you could easily argue that if the Fed cuts again, maybe we see a similar negative reaction. But honestly, you know what? I don't even care. At this point, in my view, if the Fed cuts rates next week, psychologically, there's some hope that we could see a pickup, particularly in housing and autos, two industries that seem to be losing strength by the day. It is vital for the Fed to recognize that it needs to cut. Then again, before the Fed meeting, we have Election Day, and both candidates seem to be eager to bust the budget. The only question is whether they can get their agendas through Congress. Very difficult. And yes, Trump would be more of a budget buster than Harris because big tax cuts translate into a bigger budget deficit. Oh, and just to be sure, election night coverage, I'll be here Tuesday, actually right on the set, believe it or not, with my colleague, Carl Quintanilla, and we're going to be offering election coverage like none other. It'll be a late one. I hope I don't have to pull another all-nighter like we did with that Chevron platform last week. Hey, by the way, Chevron had a fantastic quarter this very morning. It is still cheap. Now, back to the pedestrian earnings reports. Well, not all that pedestrian because you know what? It starts with Berkshire Hathaway, which they actually report tomorrow, but we'll dissect it on Monday. There's no such thing as a bad quarter at Berkshire, right? Because we're dealing with Warren Buffett. I do want to know what he thinks about the election, but I know what he'll say. He'll just say, listen, he'll make money no matter what. Okay. Next, we've all fallen in love with nuclear power. And that means we like Constellation Energy. I've been recommending this stock for years, but I think it's become a cult stock, and it doesn't matter what they have to say. Same as Palantir, which reports after the close. Palantir stock is one of the best performers of the S&P 500 this year, and the cult members who own the stock, they seem eager to push it up to exceed the 2024 percentage gain of NVIDIA. Right now, NVIDIA is up 173%, Palantir is 144%, so it will require some heavy lifting. Now, they could pull it off. So if the stock gets hit on its numbers, I want you to buy some. This very evening, by the way, NVIDIA got added to the Dow Jones average and Intel got the boot. Now, there's not a lot of money indexed to the Dow, but it is fabulous for bragging rights. The NVIDIA stock should not have gone up after the bell on this, but it doesn't matter. People get excited about things. It's insane to watch these buyers, by the way, in a Palantir, who don't really care how a company's doing. They just buy the stock because they want it to go higher. But then again, how else do you explain the heights that Trump Media and Technology Group has traveled to without any earnings? I draw no conclusions. Tuesday, we'll hear from Builders First Source, the big distributor of housing supplies, and I bet they tell you the same thing I just said a few minutes ago. They need rates to go lower to have a lot of business to be reignited. The king of vehicles reports on Tuesday, too, and I'm actually talking about Ferrari, which is a monster of a stock. Everything luxury, and I mean everything, has been doing poorly because of China. See, it doesn't matter for Ferrari because Ferrari's more of an American stock. It would be shocked if it didn't have more upside surprise. People keep betting against it. That's been a sucker's bet. Now, the most intriguing story coming up next week is Supermicro. We know this company is on the firing line after its auditor, Ernst & Young, resigned noisily this week because they couldn't swear by the numbers and no longer trust management. Suboptimal. I have no idea what Supermicro is going to say. I do know this. Ever since Ernst & Young resigned, one of Supermicro's key competitors, Dell, has seen its stock march relentlessly higher. I think that's pretty ominous for Supermicro. Wednesday, CVS reports, and we'll learn about new CEO David Joyner's turnaround plans, we hope. He's got some real heavy lifting to do because CVS has a very jumbled set of assets. I'm rooting for him. Poor guy needs all the help he can get. After the close, ARM Holdings reports. Now, this chip architecture play is tightly linked with Apple, but ARM's IP is everywhere. I think it prints an excellent number, but you know what? That might not matter to this particular stock market if it's in a bad mood day, because the semis have suddenly become mood dependent, not earnings dependent. We also want to know about ARM's lawsuit with Qualcomm. Seems very nasty. Hey, speak of the devil. Qualcomm reports at the same time. Now, there have been stories floated about how CEO Cristiano Amon has been interested in buying Intel. They want to buy him. I think he has to move fast because after the quarter Intel reported yesterday, that stock's going higher, regardless of whether it's been booted from the Dow like it was this evening. Qualcomm itself is quite charmed. It tends not to go down on weak numbers, and it soars on strong ones. Wow, that's a very good risk-reward, isn't it? The best networking story to own out here is Arista. That's right. It's a hyperscaler helper. And it makes network switching equipment that's ubiquitous in the data center. It reports after the close Thursday, and it is a buy. DraftKings also reports after the bell. And, you might be shocked to find out that there's gambling going on here. I think it's a terrific story and a very good investment. Now, we get results from Cloudflare, too. This is a network security play we've had on quite a bit. I think it's got a great setup. Pinterest reports, and it's coming on the heels of an amazing quarter from Reddit. Maybe there's new money coming toward Pinterest, too. These are affiliate plays that are, I think, have a great niche market for advertisers trying to reach hard-to-get people. And Affirm drops its numbers, too. And we know this buy now, pay later enabler has been crushing it. Stock's been almost straight up since it reported last time. Finally, on Friday, here's a company I haven't talked about in about maybe 30 years. We hear from Fluor. I'm not kidding, 30 years. It's an engineering construction company that I'm actually starting to hear good things about. Makes sense given all the infrastructure spending over the past couple of years. But the bottom line, even with all these earnings reports coming next week, at the end of the day, the market's still going to be hostage to the election and perhaps more important, to the Fed meeting. Let's speak to Gregory in California. Gregory.
Jim, as you may recall, I am a very proud early club member, and I just love what you and Jeff do.
And I do recall, and I've recalled your very kind calls to the show, and I really thank you. It means a lot to me.
Oh,
thank you.
It's my pleasure. You really are the best. I'm calling about a stock that I know is in some ways a favorite of yours, and one you actually recently said is the clear winner in autonomy. Now, they had a fantastic quarter. They weren't expected to. They had a huge pop, and the stock has just dropped and dropped. And I just wonder, as a member of the club, you're out of Ford. Why wouldn't you pull the trigger on Tesla, which is a great car company and so much more?
You know, it's funny, Gregory. I have been actually debating that in going to Jeff Marks with it because we talk about these ideas together. And the reason is because I felt that quarter showed you not only a great car company, but they're also a great technology company. And I actually want to take what Gregory says under advisement. I listened to all the members of the club. This may be the right time to do that, Gregory. I'm going to kick it around this very weekend. It's my wife's birthday, Lisa, and you know what? There's room for both discussing Tesla and being with my wife, because why not? I've wrecked my marriage enough this week. Why not just make it Saturday too? All right. Despite all the companies we will hear from next week. Oh, that advantage being true, right? Next week, the market is going to take its cue from the election and the Fed meeting. So buckle up. Hey, special Fed meeting on Thursday, by the way, highly unusual. Now, on Mad Money tonight, elevator maker Otis Worldwide pulled back after delivering earnings earlier this week, citing, weakness in China sales. I got the CEO. Let's put this thing in perspective. Plus, some courtroom complications have been affecting Abbott Labs this year. I'm seeing if yesterday's ruling in their favor could be a catalyst for success. And later, GoDaddy CEO is joining me to break down how the company's AI work is shaping the state of small business. I had never heard of him until I realized I've been using them for years. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
What are we supposed to make of these numbers from Otis Worldwide, the world's leading maker of elevators and escalators with a huge service and repair business to boot? Earlier this week, Otis reported a small top and bottom line miss, which would have been fine, except they also had to cut their full-year forecast thanks to weakness in China. Given how much the stock had run up in the quarter, it sold off 3% in response, but it's already recovered most of the losses. At this point, Otis is down just 6.5% off of last month's all-time highs. So does this thing need to maybe cool off more? Or a rare, and I mean rare, buying opportunity in a stock that should be a real winner as central banks cut rates around the world? Let's take a closer look with Judy Marks, the chair, president, and CEO of Otis Worldwide. Learn more. Ms. Marks, welcome back to Mad Money.
Jim, it's great to be with you tonight.
I got to tell you, Judy, when I went through all the quarter and all the different panoply and the reports, I'm wondering whether they shouldn't just forget China. I'm not kidding. If every question is about China, we may be missing the forest through the trees. Is it not true that China is no longer necessarily the swing factor in be-all and end-all for Otis?
Yeah, Jim, you've got it straight. You know us as a service company, and we really had a solid quarter. Our service revenues were up over 7%. Our modernization revenues were double-digit and really compensated for that China weakness on new equipment. Couldn't be more proud of our team performing across the globe. And we returned to top-line growth this quarter, which is really a strong statement, again, compensating for new equipment. Our China business is about 13% of our total revenue for the whole company, and a third of that revenue is service and modernization, and that's growing. So, again, we know what we're doing. Our service portfolio grew another 4.2%, 25,000 elevators and escalators we added just in this quarter to our portfolio. And that really helped us drive some strong cash and allow us to do our capital allocation. We bought back another $200 million a share of share repurchases. We're going to do $1 billion of share repurchases this year, $600 million of dividends, and really make sure we return the cash to the shareholders.
Now, I had a conversation with Tim Cook yesterday before he reported his quarter, and of course, everyone there, too. It's the same thing, China, China, China. I said, how about India? And India is going to be the big growth market. That's 1.4 billion going to 1.6 billion. China may be 1.4 billion people going to 1.2 billion, for all I can tell. You reference India, too, on your quarter and about the expansion of your manufacturing facility. I know they care passionately about manufacturing there for them. What's the experience been in India?
Yeah, we have migrated our entire product set to India, and I'm really pleased. It's the second largest elevator and escalator market in the world. It's now a 75,000 unit segment. We've got #1 share, and we needed more capacity. In India, you have your supply chain local, so we manufacture elevators and escalators at our Bengaluru factory, but we were running out of space. So we bought the land next door. I was over there last month, and we are going to expand. But you do it more than just for having a local supply chain, because we do manufacture local for local. everywhere in the world, including here in North America, you do it to be cost competitive, Jim. And that's where you get your market share growth. You bring your new products to every market locally, and then you serve them, as you know, for 20, 30, 40 years. We modernize them at about and refurbish them at about 20 years, and it just drives that service flywheel that is the key to our business. Well, our margins are going to grow this year, even with the challenges we face in certain new equipment markets. We're still going to grow 70 basis points of margin expansion.
Well, I think it's great that you bring this up. I'll tell you what I think has been the difficulty for our viewers, but I think some of the buy-siders get it. The end would be like calling Larry Culp at GE Aerospace and saying, wow, Boeing's not making any planes. I guess that's really bad for you. And not realizing that their business is a service business. And that the fewer planes are made, the more money they make. To some degree, the idea that they're not putting up huge apartment complexes right now in China doesn't necessarily mean that you do badly, because they have already an existing group of places, and they care. As I've worked with GE, I worked at a bunch of companies this week that are in China. China cares passionately about safety. People don't realize that. They're passionate, just as good as we are. And so they have to have you in just like we do, if not more so.
Yeah, and it's the largest service market in the globe. We've doubled our service portfolio there since we spun in 2020. And even this quarter, it was our 8th straight quarter in China of growing our service portfolio mid to high teens. So China units are also going to need modernization. The China stimulus, the first part of it that was issued in July, is for equipment renewal. Elevators are included in that. We think that's the early part of what we'll see. But we're not counting on stimulus, Jim. We know how we need to operate our business across the globe and in China. And, you know, when we get those rules on the stimulus, we hope to hear them maybe next Friday at the end of the National People's Congress. Again, in a regulated industry, we need to understand the how. And then we'll see what happens.
Now, Judy, I know you go around the world. One last question I've got is, I'm getting good news about Europe from Apple, good news about Europe from Amazon, good news about Europe from Bookings. I speak to these companies, and they're saying, look, particularly in Portugal, in Ireland, in Italy, in Greece, the flying pig, so to speak, Spain, they're seeing real change. Maybe not Germany because of the Ukraine and because of China, but other parts of Europe are really turning. Are you seeing that?
Yeah, we've been seeing it all year, especially Southern Europe, which is where we have our largest service portfolio. It's actually the reverse of what we saw after the GFC. I was personally in Athens last month. It's unbelievable, the development that's going on in Greece. And so we're excited. We've got a great leadership position there. Jim, America's bounced back really well this quarter, too. Every single segment for new equipment construction, residential, commercial, industrial infrastructure was up for the first time this year, and we booked almost 25% growth in our order book. So I think sentiment has turned in many places. America's, clearly Southern Europe and Middle East, Asia Pacific, India, Southeast Asia. And let's see what happens with sentiment with the stimulus in China.
Well, good. I'm glad we're talking about other areas, because I've got to tell you, you do miss a big move if we just focus on what's going on in China. There are other places to make money, and the service business remains exceptional in China. I want to thank you, Judy Marks, Chair, President, and CEO of Otis. Another great quarter. Thank you.
Thanks, Jim.
Mad Money's back after the break.
Coming up, shares of Abbott on the move after a Michigan jury ruled in the company's favor in its latest court case. Cramer's looking closer at what the verdict means for the investing club name and the litigation still pending against it. Next.
For months, one of my favorite stories in healthcare, Abbott Labs, ABT, been weighed down by what I can only describe as a grave miscarriage of justice. This is a company with one of the best fundamental stories in the industry. It's got 4 core businesses that are all going nicely, including its best-in-class medical device unit specialized in cardiology, diabetes management. I like Abbott so much that we reestablished our position in it for the Travel Trust earlier this year. We've owned it off and on again for ages, one of the most well-respected companies in America. But about 6 months ago, something insane happened here. See, Abbott has an infant formula business as part of its nutrition segment. It's a small part of that business is making a specialized formula for premature babies who desperately need specialized nutrition. Only Abbott and a company called Reckitt Benckiser make this stuff because it's not particularly profitable. It's really niche business. You know what? I think it's actually more of a public service than a business. Yet Abbott and Ricky started being hit with these lawsuits. And, I got to tell you, this one really steams me. These were suits where plaintiffs claim that the premature baby formula caused a potentially fatal condition called necrotizing enterocolitis, or NEC for short. Everyone calls it NEC. Never mind that practically every medical authority on earth says it's not true. They were getting sued. In March, Reckitt Benckiser lost a court case in Illinois. They were ordered to pay $60 million. Okay, bad. But what was really bad was it was $35 million more than the plaintiff was even looking for. That's right, the court wasn't satisfied with the amount that the plaintiff asked for. So it awarded the plaintiff more than double what they were seeking. That crushed Rickett's stock, and it knocked down Abbott's too. It was a gigantic market cap loss for Abbott, billions and billions of dollars, and nobody saw it coming. The last time I talked about the issue in July, Abbott was facing its first case in St. Louis, which is a notoriously plaintiff-friendly jurisdiction. Sure enough, just 10 days after that segment, the jury ruled against Abbott, ordered the company to pay a whopping $495 million. At the time, there were still about 1,000 of these NEC cases outstanding. So if Abbott kept losing like that, and they don't win necessarily on appeal, and of course Abbott is appealist, they would have lost $495 billion. That's more than enough to sink this $206 billion business. So it became existential. It was frightening. Yesterday, though, we got a very positive update. For the past 5 weeks, Abbott's been facing its second NEC trial with Reckitt's Mead Johnson division as co-defendant. Last night, the jury ruled in favor of Abbott and Mead Johnson, finding the companies not liable. Now, this is a huge decision. First, the case itself was extremely high stakes. The plaintiff was seeking $6 billion in punitive damage on top of $276.9 million in compensatory damage. That's a big number, equal to roughly 80% of Abbott's earnings last year. You lose too many of those, you're out of business. Also, crucially, this trial was held in the same St. Louis courtroom where they lost in July for the very same judge. That's why I told you I was pretty pessimistic about Abbott's chances when the proceedings began. But this time around, despite the plaintiff-friendly venue, the jury found in favor of Abbott and Reckitt. In favor. And that is very important. This was a real surprise because things didn't seem to be going all that well for the defendants during the trial, even as the regulators bent over backwards to protect them. Earlier this month, the baby formula makers seemingly scored a big win for their side when the FDA, the CDC, and the NIH issued a joint consensus statement asserting that, and I'm going to quote, for infants where the supply of human milk is insufficient, these formula are part of the standard care for premature infants, end quote. And then went on to explain, quote, one, there is no conclusive evidence that preterm infant formula causes NEC. And two, there is strong evidence that human milk is protective against NEC, end quote. But basically, the formula doesn't cause this disease. It's just not as good at preventing it as actual milk. But if you had enough milk, you wouldn't be using the formula in the first place. Now, there's a reason all these federal agencies came out swinging for Abbott and for Reckitt. This premature infant formula is essential to the human care the healthcare system for babies. Yet these companies make very little money from it. If they're going to get sued endlessly for trying to help, they'll simply have to get out of the business entirely. Abbott really didn't want to go there, but in the previous case, when they lost nearly $500 million, and they have a fiduciary duty to their shareholders to avoid the kind of damage. I asked Mr. Ford, why don't you get out of the darn thing? But they felt that it was the wrong thing to do. See, the crazy thing is, even though all these, Mr. Ford being the CEO, I'm sorry, even though all these agencies came out in defense of this in the National Institutes of Health report, the judge actually blocked Abbott and Reckitt from showing what I just mentioned to the jurors. They blocked the report. Then last week, the lead lawyer for the defendants, James Hurst from Kirkland & Ellis, a total renowned hitter, was sanctioned by the court and banned from the case, trying to get his incredibly important evidence in front of the jury. Banned from the case. But despite the venue, despite the judge, despite the fact that Abbott's lead lawyer had been thrown off the case, Abbott and Reckitt still won. Several analysts wrote about the ruling overnight, and the overall consensus is this outcome strengthens Abbott's position in future NEC cases and also puts Abbott in a much better position for possible settlement for the remaining claims. And let me tell you something, it's going to be for a lot less money than Wall Street thought after the last two wins. If there's going to be any money given to the plaintiffs at all. I think that's right. My hope is that this trial victory makes it easier for Wall Street to focus on Abbott's fundamentals, which, frankly, are fantastic. Remember what could happen now. If you're a plaintiff, you run the risk that you may not recover anything. The lawyers are only paid if they recover something. So why pursue this why pursue this matter. Now, Abbott reported just over 2 weeks ago, and for the third straight quarter, they turned in a solid beat and raise result. This was a clean top and bottom line beat, in-line guidance for the current quarter, while management also raised their full-year earnings forecast. Excluding COVID tests, they're looking for 9.5% to 10% organic growth for the full year. That is very big. In response to that solid quarter, the stock gained a respectable 1.5%. But you know what? Look, it would have rallied a lot harder if it weren't for the ongoing trial, with that $6 billion guillotine of punitive damages looming in the background. Sure enough, today Abbott caught fire, jumping over $5 for nearly 5% in response to their trial victory. The stock's now at its highest level since early March, just before we started worrying about this baby formula litigation because of that first trial I mentioned where the plaintiff got more than the plaintiff asked for. By the way, I told you to stick with Abbott on July 18th when the stock closed at $100 and change. If you kept the faith and bought at those low levels, you're up nearly 19%. There's much more to be gained ahead of time. Here's the bottom line. For most of this year, Abbott Labs has been weighed down by this ludicrous NEC litigation issue. I kept telling you that Abbott was in the right here, and even if some venues might rule against them, I said it was worth sticking with the stock because the business is just that good. Now, finally, Abbott's gotten his first big break in court, and though the problem isn't over, I am hopeful that things are finally headed in the right direction. Wall Street can start focusing on the excellent fundamentals of Abbott's business again, rather than just fretting about the litigation risk, which was reduced dramatically after yesterday's huge win. Let's go to David in New York. David.
Hi, Jim. I'm a long-time listener, first-time caller. I'd like to know what you think about. I'd like to know what you think about Moderna. It's very far down from its all-time high.
I'm struggling with Moderna because they have not been able to deliver on many things that they promise. I know they're a great company, but in the end, if you are talking about personalized vaccines, personalized cancer vaccines, can we see some? Let's see some numbers. Their numbers aren't there yet. If they give us numbers, we will go positive on it, but there's no reason right now to get positive. Right, Abbott finally got a break in court, and I think this outcome will allow investors to focus on the strong fundamentals of this company again. And I'll tell you, huge position for my travel trust. I really believe in it. Much more Mad Money Head, including my exclusive one of this past year's top S&P 500 performers that nobody talks about, which is wrong. It's called GoDaddy. Then, with less than a week until Election Day, I think there's one issue business people are most concerned with. I'll reveal it and tell you where I stand. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer. An incredible year for GoDaddy. It's the internet domain registry and web hosting company, provides its technology to more than 21 million customers. Over the past 12 months, it's the 10th best performer in the S&P 500, up more than 120%. Momentum continued this week after GoDaddy reported a beat and raise quarter, sent the stock up more than 3% yesterday, deserving. But we always have to ask ourselves after a big run, could it be at the beginning? Are we in the middle? Are we near the end? Or is there just a great time, which is Monday, to buy it? I don't know. Let's chat with Aman Bhutwani. Now, Aman, just so you know, he doesn't know me, but I am his biggest customer. I don't think he knows because I also pay for people not to know that I use it. Mr. Bhutwani, welcome to Mad Money. How are you?
Thank you, Jim. Thanks for having me, and thanks for being a customer.
Oh, I'll tell you, I've been a customer for a very long time, and a lot of the things that I do, it's because you have 24/7 customer service. The other guy wouldn't. And a lot of things is because I say to people, look, I want it simple. I want it honest. And if I have to get someone on the phone or I have to speak to someone, you're the only one that does it. Now, I need you to explain to the people who've never used GoDaddy that if they want to own themselves, if they want to come up with a new company, that the way to do it is to contact GoDaddy.
Absolutely. The way to do it is to contact GoDaddy. In fact, for 25 years, we have been the domain registrar globally of choice. You know, when people have an idea and they want their idea on the internet, they think of GoDaddy and they think of buying the domain name. But what we have for them today is a much bigger breadth of products. What we have for them today is a website and a productivity solution and a set of marketing tools and a logo with their domain name and so much more. And we package it all together in a really easy to use manner using AI and generative AI to make it simple for them. And yes, just, start with GoDaddy and we'll help you get online and start your business in minutes.
Well, I don't want you to hurt existing customers, but one of the things that I discovered is, as I always say to my assistant who does stuff, how come it costs so little? It's got to cost more than that. There's got to be a catch, but there isn't. How do you do it for so little money?
Jim, we're a disciplined execution house. And remember, we have almost 21 million customers, but our average customer is the micro business, right? This is a solopreneur. This is the roofer. This is the electrician. This is your cleaner. They're not Jim Cramer, right? They need this service to be cheap. They need it to always work. And they, like you, need to get on the phone. We don't even call it customer service. We call it care, because what our customers need is care. When they call us, we run to the phone. We don't make the call short. We take the time to explain to them what they need to do. And that's become a competitive advantage for us, Jim.
It's huge.
Our care organization, it earns as much as it spends. Who can say that about their customer service?
I don't want to knock the other guy. The other guy is one of the largest companies on earth. But it is, and that's who I told my assistant, just go call Google is what I said. Well, you can't call Google. And you're not going to get anybody on the phone. And if you're a small business person, you don't have clout. And I've never seen my because we go in, candidly, we do it under other names because we don't want people to know what we're up to necessarily. But you always treat everybody equally is one of the reasons why two different customer service guys at two different websites at two different large companies said, listen, don't fool around with the one you want to go to. Use GoDaddy. And now that is an incredible statement for what you've done.
Yeah, this is the core of our business, right? We want to provide a great service at an exceptional price, and we want customers to call us. We want to help them out. And we have a transactional NPS in Care, Jim, which is 65 plus. And that doesn't matter if we pick up the phone or you do it on messaging. You can chat with us on your phone, and we're going to provide you that unbelievable customer service. In fact, we're one of those few companies that if you have a problem and you call us, you'll probably become a customer for life, because we're not only going to help you solve that problem, we're going to look at your whole account. We're going to help you with whatever we can. In fact, if you've got services that you don't need, we will cancel them. And we'll tell you, we're like, no, you don't need this. What you need is this other thing, and let's save you some money today.
Now, also, there's a perception, well, wait a second, I got to open it with Shopify. But the fact is that you work with Shopify if that's how you want to sell stuff.
Yeah, the domain, a domain name can work with any other provider. We're the largest domain registrar, so you get a domain with GoDaddy, and we actually provide something called Domain Connect, which all the other providers use to connect their domains easily. And we're making it easier and easier all the time to work with any other company out there. But what we are providing now is using AI, an easy way to get yourself set up, right? You buy the domain name, the AI creates a one-page website for you. And, for our customer, imagine you're a small roofer, cleaner, whatever, you've got a template. What do you type in? You're faced with this blank screen, right? And AI can generate that for you, and we do that. We've got millions of domain names. We have over 80 million domains in our portfolio. Our AI can learn from all of those, guess at what business you're in, and then literally generate the content for you. And then you can change it and you can edit it, and that's fantastic.
We just saw I said to one of the people who work with me closely, let's just see what the AI product looks like. Because again, candidly, I don't have the time, and I know I don't want to sound like I'm some sort of king of something, but I don't have the time. But I have someone who's a CFO, and she does it. And I went there and said, how come we're not using the AI stuff? The AI stuff is incredible. She says, well, listen, we don't really need it. But, when I said it, look it over, I think we do.
Yeah, we call it GoDaddy Aero. It's our AI experience, and it literally will create a one-page site for you. If you build a full website, it'll give you content, pictures, images. If you want a logo, it'll just generate the logo for you. If you want a better logo, it'll help you create a better one with exactly your terms. It'll create a commerce site for you, a little shopping cart. Automatically, you buy a domain name, you've got a little shopping cart, you've got a pay link and a QR code, you can send it to anyone and just accept a payment. You don't need anything else, just the domain name. For the same price for a domain name, you get a pay link built in free with every GoDaddy domain. And we're taking it further, Jim. We're building entire commerce sites for customers. And all they're doing is taking the pictures of their products, dropping them into our system, and it's saying, great, I've got this picture. Looks like this is a tea candle. Looks like it's red in color. I'm going to write you a little description. Do you like this description? In fact, I'm going to propose a price for you. Do you like this price? And that's the type of magical experience we're creating for our customers. But we want to create across the board with domain, with website, with logo, with productivity solution, including email, with commerce, whether it's in store. We have a beautiful piece of hardware that fully integrates with our other experiences. Doesn't matter if you're in store or you're doing it online. just one system in the back, one tech stack in the back that integrates it all, and Aero that makes it magical.
Well, sir, I have to tell you, I feel like I'd have you back soon to talk about the financials. I'm enthralled by your company, okay? And the numbers are obviously fantastic. The stock would have gone up. But we'll talk about the quarter next time. I wanted people to know, as I did, when I asked my assistant, do you know anything about this GoDaddy? He says, we've been using him for years. They're our guy. And I feel like I myself needed to be educated about what a fabulous company you have. So thank you so much for coming on. That's Aman Bhutani, CEO, GoDaddy, one of the great performers of our time. Thank you so much for coming on.
Thank you for having me.
Excellent. Everybody's back in for the break.
Coming up, lightning doesn't just strike twice in Cramerica.
Booyah, Jimmy Chill.
Booyah, booyah, booyah.
Thanks for taking my call.
It strikes every day. Cramer is back in a flash with your questions. Next.
It is time for the White Round. Quick remember that's for close round for entertainment stock started by sales. Just because into the core stock was there. My staff is the play this out. And then the lightning round is over. Are you ready, Ski Daddy? Time for the lightning round. Quick remember. Let's start with Brian in Rhode Island. Brian.
Hey, Jim. I was calling with the ever-growing threat of cybersecurity. Calling on CYBR, CyberArk.
They hold the CYBR. They hold the keys to the kingdom. That is a terrific situation. I've liked it for many, many years. Let's go to Wayne in California. Wayne.
Hi, Jim. Hey, with investors destroying Uber this week, what can we expect with Lyft next week?
Well, I'll tell you, Lyft, they're in a dogfight. I just say, look, I thought the Uber quarter was actually really good. I would buy Uber with or without Lyft. Let's go to Nathan in Pennsylvania. Nathan.
Hey, Jim. It's Nathan here in Pittsburgh, Pennsylvania. Hey,
excellent.
I wanted to talk to you before the end of the year. I hope you have a great end of the year and enjoy the upcoming holidays. Hey, what do you think of Aurora Innovations, AUR?
Well, look, anytime I get into self-driving technology, I like to go, first of all, this kind comments, I say this to you. I like to go with Tesla. I'm not wedded to Tesla. I don't even like the guy. He seems like he was nasty to me once, the one time I met him. That does not impact my thinking. I would buy Tesla stock. Let's go to Andre in Louisiana. Andre.
Hey, Jim. Andre in New Orleans. Down here we call it Bayou.
Well, I first got it. I got Booyah from my New Orleans radio affiliate. That started in 2001. That's where it came from. So let's go to work. That's where it came from. Yeah.
Funny. I love Costco. Big fan of Jim Munger, or RIP. Poor guy.
Sure.
Right. I'm a big user. I think the credit card scanning issue is a very good issue, and I think it could be, some people describe it as a Netflix moment. What I'm curious about your opinion, Jim, is this company has been public since 1985. They give great value to their customers and to their shareholders. They've only done two splits, Jim, 1993 and 2000. The last one under $50. They're selling gold at a great price. It's just a great place to go to get a deal. Why don't they give their shareholders a deal and give it a...
Yes, I've got to ask them. I've got to tell you, I haven't talked to them lately. The CFO, who's just not with the former CFO, is going to... I would have just asked him directly. I don't know. What matters to me is great service. I just crushed it when I was there last week because they have... I don't know if you have the new pizzas, the little pizzas. They're really extraordinary. And by the way, the drink is so cheap. I told him the price was wrong. And then I tried to give him cash. He said, they don't take cash anymore. Whatever that's about. But anyway, Costco's, just buy Costco. Let's go to Fadi in Ohio. Fadi.
Thank you, Mr. Cramer. The company I'm calling about stock is down from $2.99 to $1.85. Huntington Ingalls Industries, HII.
Yeah, I got to look into, I have to find out what the heck happened to that quarter. I don't know, because all the defense stocks were good, and I saw that thing fall apart, and I didn't even get a chance to be able to look into them yet. Let me come back to you on it. Let's go to Mike in Pennsylvania. Mike.
Booyah, Jim. How are you doing today?
I am doing well, Mike. How about you?
Good. Calling about Shark Ninja. Kind of started with them as a customer. Really impressed with their customers, their product and services.
Right.
Look at their financials. Look really solid. They just had their Q3 earning report, which I thought looked really good, but the stocks dropped 20% in 2 days. What's your thoughts?
Okay, I've got to tell you, apropos of another caller, they're taking over whole aisles at Costco. I think SN is a terrific company. We had them on. However, they make their stuff here. They design it here, but it's all it's actually constructed in China. So in other words, they design it here, and then it's sent over to China, and then it's sent back here. And obviously, if Trump wins, the tariff's going to be so high that their earnings are just going to be shot. So that's why people don't want to buy Shark Ninja. It is the stock to buy, actually, the stock to buy if you think that Harris is going to be the next president of the United States. And that, ladies and gentlemen, conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, from tariffs to taxes, the presidential candidates have campaigned for next week's election with market-moving promises. Cramer's revealing the one policy stance that could shake up stocks no matter who wins the White House. Next.
I hate talking politics. It's just not my wheelhouse. I can't offer much insight beyond telling you the market impact of each candidate's statements. Given that we have a tight race, they'll be moving either way. We know that former President Trump favors high tariffs, right? Which the stock market typically doesn't like. It's never like tariffs. We know that Vice President Harris has seemingly not told us too much about what she's thinking, but she is saying that if elected, she'll work toward getting $25,000 for first-time homebuyers. That's C.R. Horton's bailiwick. You think Harris wins? I would buy that one Monday. But let me tell you what I do know. The business people I talk to are most concerned about antitrust, or more specifically about regulators punishing successful enterprises under the pretext of antitrust enforcement. The hyperscalers, according to our regulators, have apparently engaged in monopolistic practices. Google recently lost a case where the Justice Department accused it of making deals to maintain its search dominance. The judge made some very good points in his opinion about how Google paid to ensure that its search was the most used. I get that. But I also say that Google is the best search. And we would have found it anyway, but this just made it easier for us to get to it. The alternative Bing is not as good, so the exclusivity just isn't as big a deal to me, to you, to everybody as the court made it. I think Google got a bad rap, but as they say in the NFL, a loss is a loss. Last night, though, Amazon and Apple reported, and I know these two are in the sights of both the Justice Department and the FTC. These agencies believe that huge companies are inherently anti-competitive, always trying to block others in the space, make it too hard for rivals to compete. I want to give you the other side of the story. First, whenever I talk to Amazon, as I did last night, I'm struck by their commitment to lower prices for you, the consumer. At a time when the American public has been pummeled by the worst inflation in years, Amazon's one of the few inflation fighters out there, along with Costco and Walmart. I'm not going to ask to get them to get the Congressional Medal of Price Stability, but can we just accept that Amazon's beloved by more than 200 million Prime members precisely because it's the cheapest and most convenient buying option out there? Sure, they put the squeeze on their suppliers, but they pass those savings on to the rest of us. Amazon's arguably one of the greatest companies in the world. It's a real marvel. Yet that means nothing at all to the FTC. The FTC seemingly wants to wreck our greatest inflation fighter. I say for who? For what? Or how about Apple? It offers a superior product at a terrific price, but that means nothing to justice. Last time I spoke with Tim Cook, and I suggested that he bundle the company's unbelievably great health services and have people pay something per month for them as part of its growing services business, maybe $5 a month. I was thinking about the hearing aid piece I did last week, where I tried the AirPods and I could hear much better than the hearing aids that cost me 7 Gs. Tim bridled. He doesn't want to do that. He said he wanted to democratize healthcare, and that meant not charging for it. What a great guy. I mean, I was thinking like a capitalist. He's thinking like a humanist. This is the guy the antitrust regulators want to nail. Give me a break. What have they done to help us? Honestly, the FTC and Justice don't seem to realize that the American people truly believe these are great companies doing great things. Do we really want the government spending our tax dollars to bring the hyperscalers to heel? I'd much rather if the FTC and Justice spent more time going after companies that genuinely make our lives worse, rather than trying to hobble companies that make our lives better. Go after the price fixers, go after the gougers, go after the companies that collude to jack up healthcare costs, not the ones who won't even charge for it because they want to democratize healthcare. But no, these out-of-touch lawyers just don't get whom we actually root for, and it is not them. Unfortunately, neither the Democrats nor the Republicans want to recognize these tech titans as America's national champions. No wonder I hate politics. I'd like to say there's always a bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you Monday.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.